Thanks for the opportunity. Thanks for running a very professional program. I hope people are getting some good benefit from it. And I appreciate the opportunity to let me talk. So here's the good news. I have nothing to sell you. You don't have to buy anything from me. I'm not going to give you any special deals. If you're interested in what I'm talking about, you want to improve your trading based on my experience of half a century of trading, go to my website, jakebernstein.com. You'll find a lot of information there. If you like it, great. If you don't like it, no problem. You will also see pages and pages of testimonials there, people who actually use my work and benefit from it, and have done so for many, many years. So let's talk a little bit about who I am and what I do. Let me get my pointer here. Moment, please. And get started. One moment, please. Let me go to the next page. Just one moment, please. So, having had all the experience that I've had trading for so many years, giving presentations all over the world, having been on CNBC, Wall Street Week, having written and published 45 books, I know my business and my trading well enough to know that I can teach people the best trading strategy in the world, and a couple of things will happen. Number one, people probably won't have the discipline to do it. Number two, they probably won't believe me to begin with. So I'm not going to waste your time. I'm not going to waste my time teaching you strategies. My strategies are all available. They're strictly by the rules. They're completely clear, completely objective. I tell you exactly what to do, when to do it, how to do it, and show you the rules. Everything I do is based on rules. So why am I talking about the 10 rules to success? Because these are rules you've never seen before. You may have seen some before, but they're not the standard stuff that people talk about. Cut your losses, let your profits ride, and all the rest of that stuff that people never want to do anyway. So, as I said before, I could teach you the most perfect strategy in the world. I can show you things that have been right 80% of the time for the last 100 years. And you're still going to have the question, but will it work this time? This time it's going to be different. How do I do it? I can show you all the rules and people will still find a way of messing up. I realize that that does not apply to anybody who's here today. But just in case you're one of those people, I'm going to show you some rules that are going to serve you well no matter what methodology you use. And by the way, I'm speaking to you today from Santa Cruz, California, and I want to thank you for being here. So here's the good news and the bad news. The good news is we have a lot of strategies. We have many choices. We have more choices today than ever before. The bad news is this: too much information, too many decisions, too much news, too much information, too many opportunities. The more choices you have, the more confusion you're going to get. In addition to that, what you want is quality of trades, not quantity of trades. If you think that you're going to make money consistently sitting in front of the stupid machine all day long, looking at 5-minute and 1-minute charts and 30-minute charts and 6-hour charts and 60-minute charts, and that you can do that consistently, you're wrong. I wrote 3 of the best-selling books on day trading, and I can tell you right now, day trading ain't what it used to be. It's more difficult than ever before. Excuse me, you're competing with the biggest, bestest, fastest machines in the business, and you're not going to beat the computer. You're going to find out that you can make more money working at McDonald's than you can by day trading, unless you're trading very big positions. So what you want is a definitive process that aims at quality, high odds percentages, and large profits. And misspelled and. So you need a rule-based procedure, you need focus, and you need to segment and specialize. By which I mean this. You don't want to trade anything that moves people. I say to people, what do you trade? They say, I trade Forex, I trade options, I trade bonds, I trade futures, I trade stocks, I day trade, I intermediate trade, and I invest. It's not going to work. You're spreading yourself too thin. You would rather specialize at a few good methods based on performance and a few good quality sectors rather than everything. You don't want many mediocre trades, you want a few great trades. How are you going to get there? Very simple. Let me show you a couple of things. If I can get to my next slide, if the computer will cooperate with me, which for some reason it's not doing. One moment, please. It doesn't like the pointer. Okay. One moment, please. So, why listen to me? I've already given you some of my credentials. I'm a real trader. I really trade. I've presented well over 800 seminars and webinars all over the world. I've spoken to groups everywhere, real traders, new students, hedge funds, exchanges, you name it. Most of my clients are independent traders, high-frequency traders, banks, and quants, by which I mean people who trade algorithmic trades based on arithmetic and math. So the good news is I've got stuff that works extremely well. The bad news is there's a lot of stuff that people want to see, and no matter how good it is, they're going to make it not work. And the sad news is that most of the people I've met in this business over the years will never be successful. So again, as I said, we want big moves that make big money and that don't take a lot of our time. At my age, over 70 years old, I'm interested in quality, not quantity. I've got a lot of things I want to do with my life, and I'm sure you do too. So I want stuff that's specific and easy. So what am I talking about when I say big? I want to see 100% gain in futures. I want to see stocks with 200% gains. Why? Because you can make big money in less time. And how do we do that? We want to identify common elements and find things before they happen. I have ways of doing that that are based on history, repetition, and patterns. But as I said before, I'm not going to waste your time on that today. I'm going to waste your time on something else. In my work, I want to be crystal clear and specific. I want to give you real and concise examples and teach you things that you can use to make money. And I want to do something else that's very important. Something that a lot of people in this trading business don't want to do. I don't want to create dependency. I don't want to show you stuff and say, oh, it's only going to be $3,000, and by the way, if you use it, I'll give you a bargain. And I don't want to say, after 6 months when you come back and say, well, I did the stuff that you told me and it's not working for me. And I say, well, that's because you didn't interpret it correctly and you need to buy this additional product. That's not what I'm about. I want you to become an independent trader completely free of me to make your own decisions so that you can maximize your trading skills. I want to share my knowledge with you. The best way I can do that in this short amount of time is to share my 10, what did I say, 10? I mean 11 trading rules with you. I'm going to go straight to number 11 and then come back to number 1. And this is what I call one of the dirty words of trading. And again, remember what I'm saying here. I can teach you fantastic trading methods that work extremely well in all types of markets and all time frames. That's easy. What's difficult is the application. The application is the most important part. How do you follow through? How do you implement the rules? The problem with most people is they don't have any rules to begin with. If you don't have rules to begin with, how can you follow the rules? People say, Joe, no wonder you can't make any money. You don't have discipline. Joe says, you know, that sounds pretty good. I think I'm going to go see a psychiatrist and get some discipline. You can't get discipline that way. It's not going to come out of a book. It's not going to come out of one of my books. It's not going to give you discipline. Discipline comes from confidence. Confidence comes from using things that work. If you're not using things that work, you won't have confidence. If you don't have confidence, you won't have discipline. If you don't have discipline, you won't make money. If you don't make money, you'll have less discipline, and there goes the whole ball of wax right down the sewer. So, number 11, looks like. Don't ever look at a chart. Don't ever look at a trade and say, it looks like the market wants to go higher. Or it looks like the market is bottoming. Or is it possible that the market could be maybe perhaps bottoming? That is nonsense. It's a complete rubbish. Don't ever do that. If you have to say, it looks like, then there's a problem. And what is that problem? The problem is you have not identified the rules of what you're looking at. I can take 10 people, give them an Elliott chart and say, find the Elliott waves for me. Have them go off and separately make the decision, and come back and say, so what did you guys decide? I'll get 6 different answers. That doesn't work for me. So one of the dirty words of trading, never say looks like. If you find yourself saying looks like the market is topping, looks like the market is bottoming, there's a problem. What is that problem? The problem is you don't have a methodology. Otherwise you wouldn't be using looks like, you would be using orders, buy, sell, exit, reverse. You'd be using orders. There would be no looks like. Number 1, don't trade anything that scares you. Sounds a little crazy. It probably reflects my original background, which is clinical psychology, which is what I went to school for, but I use that in my trading, but not in my work. So, don't trade anything that scares you. Why? The worst thing that you can do as a trader, excuse me, is to become attached emotionally to what you're doing. As soon as you become attached emotionally to what you're doing, you lose your objectivity. And so you say, I want to trade this gold trade, but it really scares me. That's a problem. If it scares you, you're going to make an emotional decision. If you make an emotional decision, it probably won't be the right decision. So what scares you? The risk scares you. If the risk scares you before you make the trade, you've got a problem. You say, I think I want to get married, but I'm scared of getting married. You have a problem because you don't understand the situation. So the problem is, don't trade anything that scares you. How do you do that? How do you avoid things that scare you? Determine what your maximum risk is on any particular trade, the risk that will not scare you, and trade within that risk level. If that risk level is too low, then you shouldn't be trading. I have people come to me and say, you know, Jake, I want to day trade, but I never want to risk more than $100 a day on S&P futures. The answer to that problem is, you can't trade it. Is the S&P futures trade in a range of $1,000 a day, and you're only willing to risk $100 a trade, you can't trade. Be realistic about it. So, how do you know if you're scared? You'll feel it immediately. Somebody once told me, the best way to make money in the market is to not care. It sounds counterintuitive, but it's true. If you find yourself caring, you've got a problem. If you find that you've made big money, and now you're worried about the trade, you're worried about the trade coming back, giving back too much money, then you don't have a methodology that you have confidence in. You don't have a trailing stop. You don't have a profit maximizing procedure. So the answer is, don't trade anything that scares you. In the very excellent book by Jesse Livermore, by Edwin Lefebvre, The Reminiscences of a Stock Market Operator, somebody comes to Jesse Livermore and says, I'm worried about my position in Union Pacific. I'm losing sleep over it. I've got a very big position. What should I do to stop being worried? Jesse Livermore says, sell to the sleeping level. In other words, liquidate the amount of stock that will give you the sleep that you need. Don't trade anything that scares you. Number 2, always use a trading model. If you don't have a trading model, you're going to lose money. I guarantee it. What's a trading model? I use something called setup, trigger, and follow through. Why? Because every trade has a pattern. Once you see the pattern needs a trigger to say it will probably work this time. And then you need follow through, which consists of 2 aspects, your profit and your risk. Example, if we do setup, trigger, and follow through, Setups are found using patterns. Let me show you a pattern. Here's a pattern. If I go to one of my websites and look at my seasonal indicator and ask the question, show me trades in gold that have been accurate 70%, 75% of the time or more in September, October, and November, the computer does a search for me. It's all based on numbers. And the computer comes up with this pattern and says, the pattern in gold futures for many years has been bottoming around the first week of August where the red arrow is, and topping around the last week of September where the other red arrow is. I can take that pattern, go to the computer and crunch some numbers and say, show me the exact trade. Computer says, buy October gold, close of trading September the 1st, get out, close of trading September 23rd, risk 8%, 71% accuracy, average profit $22 on futures, average loss, all the statistics that I want to know, and this is how that trade worked out this year. But of course, most people will say, I can't take this trade. I'll say, why not? They'll say, because it's already gone up so much, how can it go any higher? So the answer to the question, patterns, setup, trigger, and follow through is always use a trading model. People say to me, well, you know, Jake, I think I'm a good trader. And I'll say, what makes you a good trader? They'll say, I know when to take my losses. I say, well, do you know how to maximize your profits? Knowing when to take your losses is not as important as maximizing your profits. If you don't maximize your profits, you're going to end up with nothing. The trading model, which provides for a stop loss and a profit maximizing procedure, is the absolute best way to achieve success. So let me show you another example. Seasonality. The concept of seasonality is a setup, it's a pattern. We know that if we look at, for example, 3M stock, which I've just chosen as a quick example, we ask the question, what has been the history of 3M stock in October, November, and December? The chart shows us right here at the bottom in the green box what the probability of success has been in percentages of time up or down by week, and I can take this pattern, which is a setup, and put some timing with it and say, will the stock do what it typically does? Will it do it this year? And for that I use a timing trigger. I teach specific timing triggers in my webinars. If I look at the numbers, and again, I'm a numbers guy. Numbers is what we have. We're trading to add zeros to our numbers. So if you're trading and you've got $12,000, you want to add more zeros to it, it becomes $120,000 or $1,200,000. We're trading to add numbers. Everything we do is based on numbers. If our performance is based on numbers, why not base numbers on entries and exits? So I know that seasonality, 76% of the time over the last approximate 50 years, buying 3M, close of trading October 1st, getting out February 18th, which for most people is a long-term trade, has been right 76% of the time. I like that number because it's something that I can relate to. I also know that the average gain has been 12.69%, which is shown in numbers right here under the column where the red arrow is. It says percent average profit. As soon as I reach that profit, I take part of my money off the table, remove my risk effectively to zero, and continue with the profit maximizing strategy until the end of the trade. So this is an example of my kind of work and what I'm talking about. The yellow area here on this chart indicates the period of time where I have the most probability of success. I also have that in S&P futures or in S&P cash market, which is shown over here, and that is the time frame that we are in right now. Look at the chart. Look at the bottom of the chart and look at the month of November. All those arrows up show high probability weeks to the upside. But notice they're not 100%. We don't deal with 100%. 100% is not what we do. We can't get to 100%. We want a very high probability, and we improve the probability by using timing triggers, stops, and trailing stops. Number 4, find and invest in big moves. I've said before, I'm not in this trading game to make small money. I'm in this trading game to make big money. The only way you're going to make big money is to use profit maximizing strategies. Yes, if you have a strategy that's very short term, intraday, and believe me, I've got many of those very effective strategies, the only way you're going to make big money and keep it is to increase the size of your position. You can make small moves with big positions and make big money, or you can make big moves with small positions and make big money, or you can make big moves with big positions and make the biggest amount of money. You have to decide what's right for you. Many people get very scared when they trade big positions, so if you think you're going to trade big positions and make big money in the short term, in the day time frame, you're probably not going to be successful. Fact of trading life is this: 90% of your money is going to be made on 10% of your trades. If that's the case, the 10% that make you money need to be really big. And unless you have a way of doing that, finding and investing in the big moves and trading those big moves to their logical conclusion, it's not going to work for you. Rule number, let me give you an example. This is an example of one of my charts, lumber. It shows a pattern in the red, which is a cyclical pattern. And in the middle of the chart in green, we show commercial buying activity. In other words, the biggest investors or traders in the world who are in the business. You'll notice that each of these red arrows, commercial buying activity was very strong. On the bottom of the chart, we have small trader sentiment. You notice at the bottom of the last move where the red arrow is, there was heavy commercial buying at the cyclical low, while the small trader at the bottom in blue was the seller, had a very negative sentiment. These are the kinds of patterns that I'm trading, that I'm looking at to find the big moves. And the beautiful news, the lumber futures have an ETF WOOD or CUT, which have done exactly what the futures have done for the big move. Use the news by being proactive, not reactive. People say, well, there's earnings coming out tomorrow. What should I do after the earnings report? Have you ever noticed that after big positive earnings reports, stocks tend to open higher and go lower? Or after negative reports, they tend to open lower and go higher? As a trader, you want to be proactive, not reactive. If you react, you're most often going to react in the wrong direction. You want to be proactive by finding these moves before they happen. How are you going to do that? You're going to use patterns to capture those moves. And one of those patterns is look at the news. Example. These two lows that I've indicated on this chart. One of them in 2008-2009, the next one in 2015-2016, and we were still in that big cyclical up move. Go back and look at the news. This was the news at the 2009 bottom. All over the internet, lumber prices demand will drop to record lows in 2009. So I'm telling you something you already know. The news is most negative at bottoms and most positive at tops. And then we take this one, for example. Think about this. British pound versus the US dollar. If you look at the history of the British pound versus the US dollar, and this is a beautiful forex trade, you will find that the major lows have come about 8.1 years apart, all the way back to the 1950s. So if you look at these big red arcs, the time between those is about 8.1 years. Isn't it interesting that 8 years approximately from the last low, the most recent low where the red arrow is, comes at the time of the so-called Brexit. At the time of the so-called Brexit, people are saying the British economy is going to hell in a handbasket. The Brexit is going to cost them a lot of money. It's going to ruin their economy. And at the same time, the small trader, showing at the bottom of the screen in blue, is very negative. And what are commercial traders, the biggest traders in the business, banks and hedge funds, what are they doing? They're buying more British pounds against the US dollar than ever before. It's like the Matrix, if you watch that movie. One world is on the outside and one world is on the inside. The world that we live in is not the real world. The real world happens under the surface, and so be prepared for a big move in the British pound. So this is one of the ways in which we find the big moves, and then we time them. Just because we have an 8-year cyclical low in the British pound doesn't mean I'm going to run out and buy it. I need a timing trigger. So then, look at the news. The last low, which was back, let me find my pointer, which was back all the way over here, 2009. Look at the news. British pound hit 7-year low against the dollar. So we knew, based on the history of the British pound, it was going to bottom against the dollar for that 8-year low. These are some of the news items. Again, the worse the news is, senior economist dumped the sterling, and he said that at the exact cyclical low, so you can find news all over the place. Number 6, always trade in multiple units. Why? I prefer units of 3. My first unit, I take my profit at a profit target, which you must know before you make your trade. Once you make that profit target, you're out of what I call the danger zone. Your risk is effectively zero. Target number 2, a trailing stop, specific objective trailing stop that locks in at least 75% of your profit. And target number 3, break even, the place at which you put on your trade. You follow that up with a second target, which I teach in my work. So trade in units of 3 gives you an opportunity to take your profit, get out of risk, and ride the big move. Most people are one-lot traders, or they enter and exit all positions at the same time. Don't do that. Remember, exit has to be flexible. You need exit strategies once you've got your entry. The exit strategies have to give you profit maximizing opportunities. Unless you have those, nothing's going to work for you. Number 7, the danger zone concept. The danger zone concept applies to my first target. You need a first target, a first opportunity to get out of the danger zone. The more times you can trade by getting out of danger quickly, the more opportunity you have to ride your remaining positions for a bigger move. And believe me, I've done enough trading in the last half a century to know that trading is all about the big move. If you don't believe me now, you'll believe me later, but most of you, if you've been trading for even a little while, you know that the big money is made in the big move. Don't take the Kool-Aid that has you believe that you can successfully day trade consistently over a long period of time and make money day after day. It doesn't work. You're going to make 20 or 30 profits, and then you're going to give it all back on one trade. Number 8, chat rooms. This is my favorite. Why would you want to go to a chat room? Why would you want to be in a room with a bunch of anonymous people, or people who are faking, who are there simply to promote their ideas about things that they're holding, or to promote fake news and believe them? It's a great place to find losers. If you're looking for losers and you want to develop a contrary opinion indicator, go to chat rooms. But chat rooms will be poison for you. Don't believe what you see, don't believe what you hear. It's tricky and it makes no sense. Use your time in a much better way. Number 9, know and use my 3 losses rule. Let me tell you about the 3 losses rule. Somebody comes to you and says, I'm going to teach you a new trading strategy. Here's the track record. They teach it to you. It's rule-based, and you say, oh, this is great. This is incredible. I'm going to start using this right away. Chances are you think it's incredible because it's been working so well. If it's been working so well, chances are it's going to stop working for a while. What you're looking for is a great strategy that's rule-based, that stops working for a while, and then you get in. I measure that by using my 3 consecutive losses rule. In other words, once I've developed a new strategy, I want to know how well it's done over history, and I want to wait. Wait for what? I want to wait until it loses money 3 times in a row. The good news is that after 3 times in a row, your probability of success, provided it's a good methodology, your probability of success will be higher. The bad news is you may have to wait. Most people don't like to wait. You're going to have to sit through some winning trades and say, gee, I wish I had taken that one, and you're not going to be happy. But it's all about patience. Use the 3 consecutive losses rule. If you don't have the patience to wait for 3 in a row, then do 2 in a row. But do me a favor, don't jump in right away. Wait until it proves itself. And last but not least, don't tell people what you do. I live up in the mountains here in California. I know very few of my neighbors. They don't know what I do. I prefer it that way. As soon as you tell people what you do, whether you're a day trader, or whether you're a Forex trader, or whether you're just a simple stock trader, or a money manager, they're going to say to you, what should I do with my 401k? What do you think of the gold market? What do you think of the stock market? You give them an opinion, and you're right. You're a hero for a day. They'll come back to you, and they'll keep on coming back to you and asking you for more information. If you think you're that good, sell them your information. Don't give it to them. If you're wrong, you make an enemy. So I like to keep it quiet. People say to me, what do you do for a living? I say, I write books. I don't want to talk to them about their investments. I don't want to talk to them about their trades unless they're willing to pay me money for that advice, in which case it becomes a business transaction and it's not personal anymore. We've already run through number 11, which is the looks like. So before I take questions, and as I said before, I have nothing to sell you. If you're interested in my work, go to my website, jakebernstein.com, or you can go to trade-futures.com, or you can go to my website where I show strategies, jakestradingstrategies.com. If you're interested in me mentoring you, you can go to the link on the top and find out information about what it takes and what it costs for me to work with you one-on-one on trading. And so I have a few minutes left. If somebody could relay questions to me, I'd appreciate that because I can't see the questions that are being asked here.
Okay, no problem. One just popped up. It says, will you please show Rule 3 and 5 again?
Sure, absolutely. I think I can do that. Here's Rule 3. No one understands use seasonal strategies, by which I mean seasonal strategy, specific entry date, specific exit date, which we look at on the computer like this, and we can do that for any market or any stock. We do high probability trades, and it was at 3 and 5, was that?
Yes. Mm-hmm.
And here is number 4 and number 5. Use the news by being proactive, not reactive. So what I'm saying is this. Many great trades happen after the news comes out. But those trades that happen after the news comes out are usually the opposite of what you expect. So if you're familiar with my work, you know the gap trade. Many very big winning trades on the long side happen after gap lower openings, by which I mean lower openings below the low of the previous day. And many gap sell trades happen after a higher opening above the high of the previous day. So that's what I mean by using the news proactively. In addition to that, most bottoms are made on negative news. We know that, but we need to find a way of objectively determining that. And so we like to look at the cyclical behavior of each market and combine it or correlate it with the news. So that's the answer. Any more questions?
Great. Yes. Do you teach Forex strategies?
All my strategies work on Forex, which are cross versus the US dollar. But my timing strategies work on any Forex pairs whatsoever in any time frame. But again, I want to say this. The smaller the time frame, the smaller the profits. The smaller the time frame, the more impact random behavior is going to have on the market. So if you have a strategy and you want it to work better, increase the time frame. If you want it to work worse, decrease the time frame, because bigger time frames are more predictable than smaller time frames.
Okay. Are seasonals available on your website? This is from Bill.
They're available at seasonaltrader.com, and there's a free trial over there. And again, if you like it, great. If you don't like it, sorry, but it's based on huge research going all the way back 100 years to extract patterns that have been with us for that period of time. And we are in one of those patterns right now. In fact, the biggest, most reliable pattern of the entire year in the stock market.
Okay. And then we have actually just a comment here from Joseph. He says, once again, Jake has given priceless information. Do yourself a favor and stop looking for help from anyone else. Jake is the best.
I didn't pay that guy. I promise I don't even know who he is.
No problem. We have another one is, where do you find seasonal trade history?
We analyze prices, so the entire history of each seasonal trade is located at seasonaltrader.com. So if you pull up a specific stock that's on our list and ask the question, has there been a pattern in that stock, it will show you all the patterns with exact entry and exit dates over the course of many years. That holds true for futures and stocks as well.
Okay. And do you teach future options? This is from Kenu.
I hate options.
Okay.
Options are a waste of my time and a waste of my money. Not only do you have to be right on the trade, but you have to be right on time. And the problem is that sometimes you're right on the trade makes money, but you lose money on the option because you're wrong on time. So for me, it's not a thing that I like to do. There's money to be made in option strategies, but again, it's not my cup of tea and I don't teach it.
Gotcha. A question from Bill says, what do you think about Bitcoin?
My son, who's a great little trader on his own, loves Bitcoin. He bought Bitcoin at $500 and he still owns it. I can't trade a market that's not transparent. So I'm sure Bitcoin's a great speculative market, but it's not for me. Maybe I'm just too old-fashioned, but I'd rather trade S&P futures. That's where I can get my kicks.
Gotcha. Okay, another one popped in. On Seasonal Trader, what is the difference between U.S. entities and short-term U.S. entities?
On the U.S. entities, the short term looks at trades that last less than 10 days. So if you're looking at a short-term pattern, sometimes there will be no trades for certain years because those trades fell on dates where there's a weekend. On the bigger trades, the longer-term trades, we don't look at those short-term trades. So you have your choice. Many times the short-term trades are more effective, but again, if you decrease the time frame, you decrease the potential profit.
Okay. And another question, you might have mentioned this, I'm not sure. Do you use seasonal trading in Forex?
Absolutely.
Okay.
At seasonaltrader.com, all the currencies that are listed are versus the U.S. dollars, so they're the currency versus the U.S. cross. We don't look at some of the other crosses, like, for example, the euro-yen and things like that. There are seasonal patterns there, we just don't cover them at Seasonal Trader because they're not as liquid as the ones versus the U.S. dollar.
Gotcha. Okay. I think that's it for the questions. If no one else has anything, let me just scroll through and double check. Okay.
So I want to thank you for giving me the opportunity to talk, and most of all for putting on a great show, very professional format that you do. If there's anything I can do to help you further the cause, let me know and I'll be glad to do that, because I think people need to be educated, and I think a lot of times that education should be free. So what I've given people today is free of charge. There's no strings attached whatsoever. You don't need to buy anything. You don't need to do any business with me. I just give this to you because I think people need to give something back to a business that's given them a lot of money.
Great. Thank you so much, and we appreciate your years of information and knowledge in the business. I think I see one thing else popping up. A comment here from a Tim. Thank you, Jake. Nice to hear you again after all these years. First time you met was in the early 90s in Chicago.
You're going to make me cry.
And then another comment from TN says, God bless you, Jake.
Thanks a lot, guys.